Hey, welcome to the Truth About Real Estate podcast. Today we have special guest Avery Carl from Short Term Rentals and Investing. And Avery Carl is a Wall Street Journal Top 100 agent in 2020, and her team at the Short Term Shop focuses exclusively on vacation rentals and short term rental clients. Avery has helped over $200 million in short term rentals since 2017, and as an investor herself, has over 30 properties. She specializes in connecting with investors, focusing on short term rentals, creating the highest ROI potential. She has offices in Gatlinburg, Panama City Beach, and Gulf Shores, Alabama. So definitely welcome to the show. So glad to have you here. Can't wait to get to know more about you, about short-term rentals, the investing side, and a lot of fun facts about you that we can dive into. Thanks for being on the show today.
Yeah, awesome. Thank you for having me.
So first off, let's learn more about you. Like, how did you get started into real estate and especially short-term rentals?
Uh, it's pretty similar to every other real estate investor story. I was hating my corporate job. My husband and I moved to Nashville. We don't live there anymore, but we moved to Nashville in 2013. I didn't have my license yet. I was working as a marketing manager then. And we, our real estate agent at the time was really trying to get us to buy in this super hip, fast appreciating part of Nashville. And we didn't really want to do that. We were, coming from Brooklyn, we were tired of neighbors. So we wanted to buy something out in the country with some land. So we did that, but we had a little bit of money left over and we did decide to it was actually a long-term rental, decided to buy a property in that area, having no idea what we were doing. We didn't even know it was called real estate investing at the time. We were like, oh, we're going to buy a rental house. Cool. And luckily it ended up being, we still have that one. It ended up cash flowing really well. And when we got that first rent check, we thought, okay, this is something we want to repeat. This is something we want to scale. So then we started educating ourselves and reading books and listening to podcasts and things like that. And we had like small single family worth of down payment or capital left for a down payment. And we thought, okay, what can we do? What can we buy with this that will make us the most amount of money the fastest so that we can buy more properties faster? We landed on short term rentals, but we didn't want to do it in Nashville because the regulations in Nashville are just ridiculous for short term rentals. So we thought, well, where can we go where it's just a normal thing, has always been normal for people to rent just a single family home when they go on vacation? So we landed on the Smoky Mountains in East Tennessee. It's about 3 hours east of Nashville. And we, again, had no mentorship, didn't know anybody who was doing the same thing. We knew that we didn't want to put it on a management company. And we knew that we could figure out a way to manage it remotely from Nashville without actually being there. So again, we just bought something and figured out the systems, and it turned out really, really well. We bought a cabin, and long story short, scaled that into 5 cabins over the next year and a half. I got my real estate license along the way there. And the short term shop just kind of came about when friends of mine were, we'd be chit chatting and I'd be telling them, how much money we were making on our cabin. And they said, oh, well, I want one of those. Show me how to manage that. And it went from friends wanting short term rental properties to clients, just, clients that I didn't know wanting short term rental properties. Very quickly became the top agents in the Smoky Mountain market. And now we're also in the Destin, Panama City Beach area, Gulf Shores, Alabama, Blue Ridge, Georgia, and most recently the Forgotten Coast in Florida. So the Cape San Blas, St. George Island, Port St. Joe area.
Nice. That's really cool that, it's really hard to get started in real estate, especially as a first-time investor without any mentorship or help. And you're just going in, face forward and hopefully getting through the grind and learning throughout the fun adventure, right? And definitely I love real estate investing in multi-units specifically, but doing buying single-family homes, doing vacation rentals, that's a different avenue, and it's really cool how you notice the difference between like for example, landlord-friendly states, tenant-friendly, Airbnb friendly vacation rentals, and you chose a specific area that has a good amount of that and is allowable, and that they're comfortable with it. So then I guess you would predict that things wouldn't change too much too quickly, right?
Right.
Nice. And then like how do you like when you have a choice to choose different specific areas that are open to Airbnb style vacation homes, how did you choose that specific area to get started?
Yeah. So When I choose an area now, because now I have vacation rentals in several different markets. So
Yeah.
there well, I'll zoom out a little bit first. So there's three types of markets that you can buy short-term rentals in. There's metro markets like Nashville, New York, San Diego. There are big fly to vacation rental markets like Hawaii or any of the Rocky Mountain ski areas. And then there are the regional drivable vacation rental markets. So I stick with the regional drivable ones because they are more affordable and for a vacation, not necessarily to buy the real estate, but they're affordable vacations for people, and they're a little bit more recession resistant. So in a recession, whether it's because people don't have any extra money or because they don't want to get coronavirus, uh, they're not necessarily flying to the big vacation markets and they're not going to big major cities, but they are still doing the 5 to 8 hour weekend drive vacations. So I stick to those markets just because the tourism doesn't get limited as much by economic factors.
Mm.
And also I choose markets that are tourism dependent. So the markets I'm in don't have a lot of industry outside of tourism, not a lot of primary residents. Primary residents and a lot of hotel presence are the two things that are a bad mix for short-term rentals because those are the things that cause a lot of the anti-short-term rental regulation. So I choose areas that are 100% dependent on the income from short-term rentals that have been short-term rental markets since well before Airbnb, places that you would go and when you go to the beach, you rent a condo or a beach house. You go to the mountains, you rent a cabin. Think places like that. So places that are super friendly regulation wise, decently recession resistant. Nothing's going to be recession proof, but you do the best you can. And places that are an affordable vacation.
That actually makes a lot of sense, and that's actually good that you mentioned that too. Because when people think of vacation homes, the first thing they think of is big metropolitan areas. Let's go Hawaii, let's go to San Francisco, let's go to San Diego, or let's go to New York, right, and get a vacation home. But like you're right, the cost of that is enormous, especially paying the mortgage, the maintenance, the management, and one thing you mentioned is being drivable. So being drivable is really great because you're so close by. You could self-manage it. You can remotely manage it. You could hire a property manager. But one thing is you're looking at your cost, right? And then how do you remotely manage something that's 3 hours away instead of having a property manager? How do you do that?
Oh, yeah. So actually, most of our clients live in California or
Mhm.
live, uh, not even within driving distance of the places that they're buying. Because, you can't always live nearby or in driving distance of the great places to invest. But really, everything, so that your boots on the ground people, you just need a good cleaner and a good handy person, and you can build the rest of your vendor list out from there. Like those people are going to know a roofer or an HVAC technician. And the rest of it is just automation tools and channel managers. We just use Airbnb and VRBO, but there are a lot
Mhm.
of other platforms that are similar to that. We stay so booked on those two and got so little bookings on anything else, it wasn't worth the subscription fees. But the channel management platforms have really made it a lot easier to automate a lot of the tasks that are involved because it's really just, managing a vacation rental is really just glorified scheduling and maybe making the occasional maintenance call. So it's not as bad as people think that it is to do remotely.
Yeah, I completely agree because like when I did a vacation rental in Hawaii to go travel there, the owner had it all like pretty much remotely managed herself. You can tell she's really clean. She had like automated newsletters, automated information about the property, the access, the lockbox, not lockboxes, the smart keys,
Yeah.
the access, the cleaning schedule, and any questions, and then afterwards, post reviews. It was like so seamless that you didn't even think there was a property manager. You didn't even think the owner was managing it. It's just like self manage and run, and her rates, her reviews are really good.
Yeah, and that's, kind of the way of the future. The brick and mortar local property management companies
Mhm,
are really just kind of on their way out. They really do have to adapt or die basically. And
mhm.
a lot of the big major property management companies like Vacasa, Evolve, Turnkey, I mean, they're national companies that are managing properties, all across the country and they're basically big remote managers.
Yeah, that's right, and then the technology is helping them just to automate and streamline the process even further, and then as smart technology comes in, smart lockboxes come in, and, all the Wi-Fi access, and it gets easier and easier to manage these properties, and like you mentioned before, having a good vendor list just to help you clean it, to maintain it, then it really becomes self-managed in a sense because they are kind of watching out for you too, right? They know that this is part of their property that they're managing in a sense of cleaning, but they know they want to alert if there's anything wrong with it too. So that's kind of nice, extra pair of eyes.
Yeah, your cleaners are really kind of your mini property managers because if you're getting bad reviews and you're not getting booked, that means they're not doing cleans and they're not getting paid either. So they really are a trustworthy source to tell you if there's anything wrong. Like our cleaners will tell us, "Hey, it's time to buy new sheets. Your sheets are looking a little dingy," or I mean, and some of them will even on a different pay structure say, "We'll replace these for you." And they just charge you more per clean to cover that cost. But we like for them to just tell us when it's time to do something. We'll get on Amazon and order, that way you kind of have some quality control over what is being stocked. And we just Amazon it to them.
Nice. So, like, what made you decide to focus like exclusively on vacation short-term rentals when you're first going into real estate? Usually, people buy single-family homes, they do long-term rentals, they might buy an investment property or do a flip. How did you choose to go to short-term rentals first?
When in my sales business or just in my investment business?
Both.
Okay. So investment business, I don't only do short-term rentals. I've got 30 something properties, like 39, and 7 of them are short term. So I like to think of the short terms as like little income turbochargers to help you get more cash flow rolling faster to scale your portfolio because it's good to have a diverse portfolio overall. I don't think it's necessarily smart to go all in on any of it. I mean, some people would disagree. I have plenty of clients that will not touch long terms. They only want to do short terms. And there's plenty of like multifamily guys out there that would never mess with a short term rental. So, diverse portfolio is good, but short terms can be a really great place to start because the cash flow is so much heavier. You can get a conventional loan, so the interest rates are better. Down payment is less generally because you do have that 10% down vacation home loan option. And so it's just a really great place to start to scale faster. In my real estate sales business, I tried to resist focusing only on short-term rentals. That's where most of my clients were coming from, but I was still, when I first started, trying to be a jack of all trades and just selling any kind of real estate that I could get my hands on. And it wasn't until my second year of real estate I just sold, I want to say 30 million. My
Nice.
first real year in real estate, and the majority of that was short-term rentals. But I was really trying to resist that, and I took a client who was a friend of mine's parent, or both her parents actually, and they ran me all over Tennessee. Ended up firing me because I didn't know where to find the serial number on a $50,000 mobile home. So here I am thinking I'm doing them a favor because I've sold so much real estate in the past year, and then realize, oh, wait a minute. Why am I doing this? Why don't I just focus on on the place where the money is coming from and just be an expert at that? Because clearly trying to do everything is not going to work because you need to focus on one thing. So at that point, I was like, okay, I just got fired over a $50,000 deal. I'm just going to focus on what makes me the most money.
That's the best way to do it. Focus on what you do best and what you love. You can tell you're passionate about it too, so it just comes off even better. When you talk to clients, they know like you really know what you're doing, and they just have that absolute trust in you to, hey, help them with short-term rentals, help them with vacation homes. Even though specifically, generally, like you might want to do everything. It's harder. It is harder to know all the different products, all the different areas, all the different property types, everything about every single category. It's not easy to do at all. But it's really nice that you have a really good niche too that not many people are in as well.
Right.
So when you started building this up, how did people find out about you? How did they learn that you were the short-term rental person to go to? How did they see that?
It really just started with word of mouth and like going to real estate investor meetups. Because real estate investors are always looking for like the next thing to make the most money. If everybody's focusing on one specific asset type and it becomes a really hot thing to try and get it, the margins start to get smaller and smaller because everybody's trying to get it and outbid you. So I just started going to those and networking with other real estate investors, and it was just something that a lot of them weren't doing at the time. And it was almost like it's only recently become seen as like a legitimate real estate investing strategy. like burrs and buy and holds and flips, those have all been around forever. But short term rentals are kind of a new thing in terms of everyone being able to do it as of the last 15 years, with the rise of Airbnb. So I just kind of networked with other investors, and then investors know other investors. And it was really just all kind of word of mouth to start out.
Nice. And how does it compare when you start talking to investors and they start asking you, well, how does a short-term vacation rental compare to a single-family buy and hold, a multi-unit, investing in different areas versus, short-term rentals?
Well, it's it's definitely more work to manage a short-term rental than it is to, buy a 12-unit apartment building and put it with a property manager. But a lot of people, it's just a lot more accessible for more people to buy, put 10 to 20% down on a $600,000 short-term rental than it is to go get a commercial loan, having no experience and not really having any assets. It's difficult to get a commercial loan if you don't have a lot of experience to show sometimes. So it's just a very attainable asset for more people. Um, so because of that, people are a little more drawn to it. It's definitely more work than a long term, but at the same time, people also assume, okay, this is going to be, I'm going to have to spend more on maintenance because there's more people in and out. But I found the opposite to be the case. So when a tenant moves out of my long-term rentals, I can generally expect to have to paint, add new carpet, all that, because they're in there doing God knows what for however long. And the short terms are being professionally cleaned 2 or 3 times a week sometimes. So it's actually easier to maintain and less to maintain a short term because there's not somebody just holed up, smoking cigarettes that you don't know about for a year and a half in your property.
Yeah. I think one thing, or sometimes I feel like misconception is that, okay, I got a short-term rental. Like, how often is it really going to be booked throughout 1 year? How much cleaning do I need to do? How much maintenance do I need to do? But like you just said, your maintenance overall should be less because the property is being managed more often, it's being watched more often, it's being cleaned. So the overall management should be less because you're actually aware of things faster that's happening. And then the use cycle, people are coming in and out. A vacation rental, people are visiting the area. They're mostly not at home. They're there to sleep, there to enjoy the view, maybe in the location, but they're not there to live full time. And God knows how many friends come over, how much if they smoking, drinking, partying. You don't know, right? As much, and throughout how many years. So
Right.
that deterioration can go really, really quickly as well. Um, but the part about being vacant too, you can have an idea of being vacant because you can take a look at the area, you can take a look at the other places that are for rentals and kind of see how they're performing as well before you actually buy your first property, right?
Yeah, absolutely. So there's a few different sources where you can find that kind of information. AirDNA is one of them. It's a data company that focuses on short-term and vacation rental performance. It's not gospel, so don't go to AirDNA
Mhm.
and just say, "Oh yeah, that my property is definitely going to do this." It's just a nice guide. It's a data point, and you can see what the market has done as a whole by number of bedrooms. So if you're looking at 5 bedroom properties, you can see, okay, they've been 60% booked annually at an average this price per night, and the average revenue is about this much. So you can do that. Another way to kind of eyeball it is what I call the enemy method, where you go on Airbnb or VRBO and look in the neighborhood where your subject property is, and kind of look around at your neighbors, look at what they're doing, what you can see, what their price per night is, what their cleaning fee is. You can't obviously see their annual numbers that way. You can
Mhm.
just kind of see, what's happening over the next month. But and you can also kind of say, okay, well, how can I improve on their listing? Do they have, bad iPhone photos? Well, I'm going to get pro photos. Is their listing not that great? Mine will be better. So then you can kind of gauge if you can outperform them or not. So that's another way. So but there's also, you mentioned vacancy, which I wanted to zoom in on. So just because a property has a higher occupancy rate does not necessarily mean it's going to make more money. So for example, I own a 4 bedroom in the Smoky Mountains, and I also own a 4 bedroom in Destin, Florida. The Smoky Mountain one has a higher occupancy rate. It's really only kind of slow in January and February, and it's pretty much, I would say, like 90% booked the rest of the year.
Nice.
Whereas Destin, it is March and April. it's like 80% booked for spring break. Once May hits, it's 100% booked from May to October. And then it's just kind of sparse bookings from November, December, January, February, and then beginning of March. So there's quite a bit of vacancy, but their gross annual income last year was very, very similar. So we made the same amount of money roughly uh, for the year on both properties, but the vacancy on the Destin one was much higher.
Nice. Yeah, I like that. I think just having a good understanding of the vacancy factor, the numbers it performs throughout the whole year, and then seeing how that is on your return is the best way to go.
Mhm.
And then seeing how your property can be competitive against other properties, in quality, the materials, the photography, the videography, just information, and your reviews can help drive it up faster to get booked faster, right? Higher bookings ratio. So that really helps. And I've seen too, even in the Bay Area, like I've seen some other people I know, for example, let's just get Pacifica Coast side, the rentals on average for a long term might be 4,000, but the people who did short term rentals, they're hitting 12 to 15,000 a month. And they're doing it for quite a long term, and they know on average, even with the vacancy factor in the parts of the year, they were killing the 4,000 by far.
Mhm.
So that's like, wow, but it's a different style, right? And you have to kind of diversify your portfolio and learn about that style and get used to it and take the calculated risks if you want. That makes sense, right? But it's like, that's amazing. And your management's pretty simple. You're pretty close by. It makes really good numbers and people enjoy the view, the surfing, the area, they're close to SF.
Mhm.
So, but how come more people aren't doing it yet?
They are.
They are. Okay, good.
Yeah, yeah,
A
all the
lot.
markets that I operate sales teams in have it is it's really difficult to get a property now because there are a lot more buyers than there are inventory, and I know that's kind of a symptom of the entire real estate market right
Yeah.
now as in the country, but there's a lot of short-term rental investors now, and I think it'll eventually get to where it's just considered, another asset class and not kind of a like new school strategy at all.
What kind of numbers are you seeing in general? Like, just pick any area you like, but like, what can people kind of generally expect to get started into vacation rentals?
So in terms of like
Buying
a
it,
return on
like,
investment or
yeah. So, for
okay.
example, I want to work with you, and I want to get my first vacation rental. How would you get me started?
Okay, so first we would talk about what your price range is because what your
Mhm,
price range is going to determine how big of a property you can get.
mhm,
Um, And in the beach markets, it's also going to determine whether you end up with a single family or a condo because the 1 through 3 bedrooms in the beach markets are typically condos, and then the 4 bedrooms and up are single families. In the mountain markets, there's everything from 1 bedroom to 27 bedroom cabins, so that's not as much of a concern. So we figure out how much you want to spend. The highest return on investment comes at the 4 bedroom and up mark because you can over double your income versus a 2 bedroom, but your expenses are only going to be like 10 to 15% more. They're not going to be double. So you just have a much wider profit margin there. So if we'll just use a 4 bedroom as an
mhm.
example.
Yeah, that's a great example.
Sure. So we'll also use the Smoky Mountains as an example. So 4 bedroom in the Smoky Mountains, you're looking at, depending on the age of the property and a few other things. So like a 20-year-old, cute, nice place to stay, nothing spectacular. You're probably looking at about 600,000 right now,
Okay.
and that'll gross you about 80,000 a year. Whereas a brand new 4 bedroom that's got like nice and modern cabin feel and photographs really well, you're probably looking at like the 700 range, and it's probably going to gross you close to 100. And then the new thing there is the indoor pool cabins. So a 4 bedroom, brand new 4 bedroom with an indoor pool, you're looking at probably like 800, and that's going to gross you 130, 140.
Nice.
And yeah, and it's really difficult to tell anyone what they're going to net on a
Yeah.
short-term rental because it's so different for everyone. It's 100% dependent on how you manage it. Um, but generally speaking, in a lot of markets, there will be like a utilities disclosure where you can see what they've been paying for utilities, and then they can plug in their mortgage payment there and kind of figure out what their net would be.
Okay. And then you mentioned earlier too for vacation rental, like, you can probably start with a 10% down payment and get into one of these.
Yes. So there are some stipulations to that. And this is
Yeah.
not, lending advice. Definitely check with your lender before you make any decisions on anything. But there is what is called a vacation home loan that a lot of investors utilize to buy short term rental properties. And what that is, it's a conventional Fannie Freddie product, and the interest rate is actually less than a conventional investment loan. And the stipulations to get one are the property has to be over 65 miles from your primary home.
Okay.
You have to intend to stay there for 14 days out of the year. And you can't put any sort of a contract on the property that takes the control away from you, taking away your ability to actually stay there. So no leases, no property management contracts, but there's nothing in the Fannie Mae guidelines as of now that says you can't rent it out when you're not using it.
Mm.
So a lot of people utilize that to get a short-term rental property.
Nice. And you mentioned before, for example, let's just say you had a $600,000 property, you put 10% down, that's about 60,000 plus closing costs. And on average, you're saying the rental throughout the year, including vacancy, was about 60,000 or 80,000?
About
80,
80 for a
80,000.
$600,000 property. Yeah.
Nice. So when you look at that too, and you calculate the total net, how much net operating or cap rate are you just generally getting?
So it's difficult to analyze them by cap rate just
Mhm.
because they
Yeah.
have to be appraised like based on a residential. A kind of non-standard real estate investing metric that I use
Mhm.
is you can kind of generally, if you do everything right,
Mm.
expect to net between 35 and 45% of your gross after the mortgage is what I'm kind of seeing with my properties. Again, your net might be a little bit different because you manage things differently, but now that I've got quite a few and then I have a lot of clients, I've got, done some polls on my Facebook group, and that's generally what people are seeing.
Okay, that's a good number if you think about it. For example, if you had a certain down payment and you had all your expenses with the vacancy and the rentals, you're still able to net 35 to 40% on your money.
Yeah.
That's really, really good,
Yeah, it's great.
Yeah, you would technically you would want to throw a lot of money on the fire once it gets going, and just keep
Yeah.
going, and then choose specific areas. How do you choose between a beach area? Let's say 4 bedrooms. How do you choose
Okay.
between beachfront and like the Smoky Mountains?
Well, it just depends on the specific investor. So a Smoky Mountain place is, like I said, is going to have a longer high season. So if you're somebody that like really wants to see roughly the same amount of cash flow coming through the door every single month, then maybe something like that is for you. Whereas if you're somebody who wants to be able to use it quite a bit yourself without cutting into the annual income, then maybe a beach market is better because while the annual income is very similar, you're going to have some downtime where you can go there without having to necessarily block it off and cut into your income.
Yeah, I thought about that too. I was like, okay, that's great. When it's off season, you can just go enjoy it and you just be close to it. And if you need to take some of it, you just take some or share it with your friends.
Yeah.
That is nice. So, like, when for your team and your company, how do people work with you in starting to get into vacations? What services do you provide, and how does it all work? Like, what do active investors have to do? Are they really active on the whole thing, or can they become part passive with you guys?
So they're going to need to be a little bit active. So the way that it works is if you're coming to us to buy a property, obviously we'll help you determine what your price range is, which market. A lot of our clients are looking with us in several
Mhm.
different markets because the other thing that I didn't mention about that 10% down vacation home loan is you can do one per market. So you can buy one in the Smokies with us. You can buy one in Florida with us. Also offer the 10% down. Again, ask your lender, make sure that's, the guidelines are the same as when this is recorded. But so we have people who are looking in different markets with us, and what we do is it's just the regular real estate agent fee, whatever is advertised on the MLS, that's our commission. We don't charge any extra. We help you determine how much the property is going to make, and we also, once we get you close to the end of the contract and we're working with the property you're getting and not a hypothetical one, we will train you on everything you need to know, from getting your Airbnb and VRBO listings up to the automation tools to getting you connected with your vendors on the ground, like cleaners and handy people. And basically, by the time you close with us, you are ready to turn the key and make money in whichever market you buy with us in.
Nice. And, I think one thing comes to mind too, like if you're helping a lot of clients in the same exact area buy properties, then, they're competing against each other, but they all kind of understand your model.
Mhm.
But at the same time, there is still going to be a lot of vacationers who's going to want to
Mhm.
be there anyways. So hopefully the whole group of people will have really good people to visit and
Oh,
you'll
yeah.
be fine in either way. How has that been affected for these areas with due to COVID? How are they doing right now?
It COVID actually caused a boom in all of our areas because they're drivable. So, everybody was dying to get out of their houses last year, but they didn't want to get on planes and they didn't want to
Yeah,
go to big metro areas. So, I mean, we're getting higher prices per night than we've ever seen. So, do I think that's going to last forever? Maybe, maybe not. But I tell my clients to analyze based on 2019 numbers, not 2020, because they were really high in 2020.
yeah,
Um, and 2019 was a normal year. So it actually helped our markets a lot. I know the metro markets are hurting. I used to sell short term rentals in Nashville. I got out of that because it was too much hassle for my clients with all the legalities and they'd get under contract on a brand like a pre construction, and then by the time it goes to close. Nashville's changed the rules on them and they can't short term rent it anymore. So, but anyway, like the metro markets like Nashville really got hurt with Corona.
yeah. I agree with you in the sense that like I see that too, where like for example, let's just say Class A properties, they're gonna get hurt if they're the higher price ones, the nice luxury ones, and at the same time, when you start looking at overall picture, if you're in a certain area where, for example, drivable, it's way easier. Many more people can afford it. Many more people want to do it. You have a better demographic data of people who can go there, so the likelihood is going to be higher versus yeah, metropolitan areas or flying to different locations. Right now with COVID, no one wanted to fly. I don't even want to fly to different areas like Hawaii and go vacation rental there. And I even seen friends who actually drove to different places and took vacation rentals right now, especially during the whole time because they wanted that freedom to breathe, the space, the views, and then just to relax. So it is nice. I kind of can tell the boom was there, and that's good that you guys looked into that. Just like how people are looking into like mobile home storage
Mhm.
units, other different investments, Class B, Class C, multi units, right? And the rentals have been doing well there. The vacancy factor has been doing pretty well, and people who can afford to pay it, even with COVID, has been doing pretty well.
Yeah, yeah. A lot of our long terms are actually C class, and we only had two people out of 24 doors have any issues during COVID. But I mean, one of them we were going to evict anyway because he sucked and didn't pay rent before that ever happened. So it we only had two out of 24, and one of them was he was going to be gone anyway. So it really was not it we were very lucky during that time that we didn't have more issues than we did. And then our short terms, people who lived in drivable big cities that lived in small condos that saw it like in the downtown areas like Atlanta, Nashville, Birmingham, Charlotte, we're like, oh, looks like I'm gonna be working from home for a month. Can I come work from your cabin? And we're like, yes, absolutely. Like they would email us and say, what's the internet like? I need to work from home. So now we've implemented, making sure that that's in our listing because people are going to be, everybody's working from home now still. Uh, so we make sure to note that in our listings. Hey, we have great internet, work from home friendly. Come on for as long as you need.
That's one great thing that you just mentioned too. The great changes that happened in 2020 for rental, short term or long term, is that people's needs changed. And right now, I see too, even for long term rentals, is that people want fast internet in the building. They want laundry services in the building. And for example, they want a backyard. They would prefer, of course, if you had any views, garage parking, things to be at home and be more comfortable. Bigger spaces, bigger bathrooms, bigger whatever you can get, right?
Yeah, and I'm kind of interested to see what that will do to building trends because, the open floor plans and stuff, maybe with two people working from home now and needing to be on the phone and being able to hear each other, I'm kind of interested to see if there's going to be the open floor plan is going to change a little bit to more closed off rooms so people can be in separate spaces in the same house at the same time.
Yeah, I wonder about that too because yeah, the open space was nice, but yeah, definitely now if there's a group of people like 4 or 5 or 6 and you're all at home, are you guys all locked in your bedroom because you guys want to isolate the noise and you're not going to be in open space together, or you're really comfortable with your roommates being in the same space together, knowing that each of you might go out in different times and people, right? So
Yeah.
that'll be interesting. I know some places had a lot of people who had 4 or 5, 6 bed roommates. They actually got rid of them. They went to 2 bedrooms instead, just to try to isolate themselves a little bit more. And the rentals went down anyways, so they felt more comfortable. I'll just get a 2 bedroom instead of a 6 bedroom, right?
Mhm.
So that is a change too. And then I guess we'll see what happens to the open spaces versus closed off spaces. But at the same time, if it becomes closed off, how long can you sit in a box?
Yeah,
You still
that
want your
too. I
open
mean, maybe
area.
there's just more rooms and houses now, or like they're taller, or I don't know. Maybe nothing will
Mhm.
change, but it's interesting.
Yeah. hopefully bigger backyards or better backyards, because a lot of backyards where, for example, in the Bay Area, a lot of cemented backyards. Well, that's not really attractive, right? It's not really enjoyable. And now people are trying to make it like their own oasis and really make it really nice so you can just enjoy your own private backyard. So
Mhm.
that'll be different too. And then just the marketing behind all this, the changes for rentals is different now. And it's harder because you're trying to find a specific price point. You want landlord always wants the highest, but how are they really going to achieve that right now in this market? And having more rooms is more difficult now. Before it used to be super easy because you have 4 bedrooms, 5 bedrooms, and you're living in a SF. Then people want to join into that home to get a bigger house, right? But now it's different. You have 5 bedrooms, 6 bedrooms. It's harder because people don't want to get together now to live together.
Yeah, yeah, that's it's times are a changing.
It is. So, like for these rentals, okay, so you guys got all that down, and then how long have you guys been doing short-term rentals?
Since 2016, so about 5 years.
2016. What did you guys learn throughout the time period, and like any failures, things that people should know, be aware of, and how to become successful at it from the get-go?
So we haven't had any major failures. We've definitely had some learning experiences. I think the biggest one was that people get so caught up in like, wanting to create this amazing experience and be like the best short-term rental host ever. And that's great. You want to be good at what you're doing, but not at the expense of your sanity and your cash flow. So, we started setting business hours on our Airbnb of like, okay, we're not going to respond to you past this time of the evening. If it's an emergency, call the whichever authorities need to be called. Um, and we that did not hurt bookings at all. We have not gotten one bad review over it. And so that's definitely something that we it took us several years to learn, several years of like, getting up to go to the bathroom in the middle of the night and checking to make sure we didn't miss anything, that it's okay to set business hours. And a lot of people can get caught up in over improving a short term rental. Obviously, you want it to be a cute, nice place to stay, but if you're buying in the right market, you're not going to have to, like a lot of gurus will short term rental, like teach you how to Airbnb. Your property gurus will say that you have to, like, in order to make money, you have to create this really unique experience. Like, you have to turn your short-term rental into a rocket ship that blasts off twice a week. As long as as long as your property is what the expectation of the tourists in that market are, then you're going to be okay if you're buying in the right market. If you have to turn your property into a spaceship, then you're probably not buying in the right market. So just don't get too caught up in over improving things. And then I learned my biggest thing was it's okay to put it down for a little while.
It feels weird putting it down for a while because like when you feel you're vacant and you have that unknown, even though if you in your head you know the market's going to be this cycle, right? But the unknown of it's vacant for so like a week, a month, and you know that's part of the cycle. But in your psychologically, you're like, oh, this really hurts me, even though in the yearly, hey, I'm making really good money.
Yeah, so I was kind of afraid of that because I invested in the Smokies first and then I bought my beach places. So I was a little nervous about seasonality.
Yeah.
And when it came time for the slow season at the beach, it was actually kind of a welcome break of, guests asking questions and maintenance calls and things like that. So it was kind of like a nice little resting of the brain for a month or two.
How does like you mentioned that you have to be a little more active in a short-term rental versus just a long-term investment. What kind of time are you really investing into short-term rentals, like as an owner?
I would say it's less than 30 minutes a week for one property. And that time does not double for two properties. It's really only like 10% more time because you've already got the system in place. You're just adding to it.
Nice. And 30 minutes is actually not bad at all. I think even a week is not bad at all because even for long-term investment, you're still managing, like for example, you manage tenants, you're managing leases, you're managing when they want to move out, any maintenance issues throughout the year. Hopefully, you don't have such an old property that you have to do a lot of maintenance. But as soon as you get to a nicer state, you actually have a lot less maintenance to manage throughout the year, so it actually gets easier and faster. But 30 minutes is not too per week is not too bad. Adding
Yeah.
10% is not too bad. And what do they do? Like, what's the normal schedule like for a investor to do? What would they be, doing?
So once you have the property up and listed and you have why can I not think of the word channel manager, channel management software. So that you have got to have that if you don't want to spend a lot of time on these. So there's several different platforms you can use. Your Porter is the one that we use. IGMS is another great one. I think there's one called Smart B&B. There's quite a few. And what they do is they automate a lot of the tasks for you. So when a guest books your property, it will automatically send them like, here's what you need to know about the property email. It will automatically send them their door code, check-in instructions, FAQs, directions like 2 days before they check in. We have ours set to like halfway through on our Smoky Mountain ones, halfway through the booking, it'll send them one that recommends our favorite hikes. So it sounds like it's coming from us. And then it automatically sends them their checkout instructions the day before checkout. So you used to have to go through and do all that yourself, but now it's just done for you. Automatically updates the cleaners calendar, whether it's Google Calendar, Outlook, iCal, whatever they're using. So really, it's just kind of like answering a few text messages here and there. If somebody asks you something very specific, like, "Hey, where's this in the cabin?" and you can just respond and say, "Oh, it's in the closet." So you do have to just keep an eye on your notifications on your phone, but it's really just like answering a few texts.
That's really good. Actually, that's really nice to see how automated it is. I wish the long-term rentals was as automated. I know there's for the big companies, yeah, they are, but for the small mom and pop shops, they're not, right? There's not the service that kind of has all that preset for you, pre-templated, and you just like answer back and forth. So that's really cool that the way to do it, it's a lot less work than you think it is. I think the main point is buying the finding the getting a loan, finding the right agent who knows short-term rentals and buying the property in the right area, and just getting used to starting to manage a short-term rental, and using the services like Airbnb or your Porter app or IGMS to manage and get familiar with the software, and just have the expectation that you're not going to be 100% occupied. You're going to have vacancy, and as long as it's seasonality and you're not causing the issue, then it'll be pretty good, and you can kind of tell the return. But if you're starting with a 10% down and a lower number compared to a investment property, that might make sense for you. And then a part of this too is that when you're doing a short-term rental, I think that it's nice to just enjoy the space, to see it and then watch it grow. And also the fact you mentioned too, having really good photography, or having good descriptions, and hopefully really good reviews, and keeping it nice and clean. Whether you're putting a little money in just to start it and get it rolling, versus putting a lot of money in to make it luxurious, works, right? It helps. It makes a difference.
Yeah, absolutely.
Because I've seen some places that look nice when you get there, it's not really that nice. And then some places who have really bad service, and then there's some places who don't look as nice, but they have really good service. But
Yeah, it's the most important thing is to just make sure that expectations are set with the guests up front. So as long as there's not any surprises, any negative surprises for them when they get there, like in the mountains, a big one is a steep road. We've got two that are on really steep roads. They have really amazing views, but we like slap guests in the face with that 3 or 4 times before they book. So we're like, the road is steep. Is that okay with you? And then they're not surprised by it. But if you let them just find that out when they get there, they're going to be scared, they're going to be nervous, and then they're going to leave you a bad review. So it's just managing the expectations is all.
yeah, I don't think enough people do that. They set the correct expectations, like you just said. Hey, steep road, or you got to do something crazy to get there. People are just like, oh, they'll just figure it out, and hopefully they'll just book it and not leave me a bad review. I think over communicating a little bit more and setting the expectation up front, so they're aware of what they're getting into, and you already told them multiple times, and they accepted that, then they'll be fine. They won't have any negative review against you.
Exactly.
That makes total sense. I think more people need to do that. Set
Yeah, they
expectations,
do.
right? Yeah.
Absolutely.
It's like grand house, beautiful views, beautiful scenery. They don't mention it's like a little cottage, and it just like it's really
Yeah.
odd. Yeah, they make it look way better than it should be, right? Okay, cool. So one more thing too, we're gonna jump into real quick is some fun facts about you. We're learning more about you, and you mentioned that you are a championship soccer player. You were a lead guitar player in a punk rock band, and a part of Capitol and Atlantic Records. How did you get into all that, and then jump into real estate?
Well, so the soccer thing, I do have a Big 12 championship ring from University of Texas. So I
Oh,
grew up in a really teeny tiny town in Mississippi. I happened to be really good at soccer in high school, and that was my ticket out, my ticket to the big city.
oh,
So I
nice.
went to University of Texas in Austin, and I'd always like kind of messed around with playing guitar, but in Austin, obviously, it's a live music capital of the world. So I did get involved in being in some bands there, and nothing anybody's ever heard of. And so I went that direction with what I thought was going to be my career. I was working in the music business as a marketing manager. I worked for Capital Atlantic and then a few like publishing companies. And that's when I got my real estate license. So I found out pretty quickly after I got my master's degree that I make an absolutely terrible employee. I'm definitely more of an entrepreneur than an employee. And so we're kind of trying to figure out what my what my career path was going to be. And as we kind of fell into the real estate accidentally, and then people kind of started asking how, how do I do this? That's when I just got my license and like went for it.
Nice. And do you think that the championships, being a championship soccer player, being driven, right, and motivated, and coming from a background within, like for example, the music industry, helped you accelerate your real estate
Absolutely,
business?
absolutely. Because if you're not successful at real estate, then it's failure. There's like nothing really in between in real estate investing. You either have made a ton of money or you have completely lost your behind. So it's I definitely, since I'm comfortable in that space, that's definitely, and so is my husband. That's definitely been an asset. And then also, coming up in college athletics, I'm used to being like screamed at by coaches and stuff. So when you get the occasional tough client that likes to yell, I'm pretty good at taking that. So yeah, everything has led to where I am now for sure.
Nice. I think that competitive nature too, and being a soccer player, and just any sport, like having the competitive nature and the drive motivates you even further to not fail. You're gonna, especially in real estate, you can easily fail really bad, right? And having the competitive advantage that you're gonna do it, and you have that self motivation and drive that you'll get there. That's what makes a lot of good agents successful. Others who don't have the self motivation, it's really hard to do real estate in general, whether you're agent, sales, investing. It's a challenge because you have to get over in real estate, you have to get over all these hurdles, right? And it's not
Yep.
easy, and not everyone's just gonna handhold you to the goal and make you a lot of money. You gotta earn it and learn and fail to get to the where you want to be. And even for you guys, having 30 properties is a lot of work, right? Wasn't easy
Yeah.
to get there overnight.
No, no. You just really have to be someone who is going to continue to push without someone pushing you rather than waiting for things to come to you because they're never just going to fall in your lap.
Is there a way to scale too? We mentioned briefly earlier about loans and just like getting qualified, and of course talking to your specific lenders, your specific city and state. But like, is there any hurdles to get past 4, 10, plus short-term rentals that you know of?
If you're getting conventional loans, your DTI is going to be your biggest hurdle. But at that point, you just get a commercial one. There are several commercial lenders out there that are geared towards short term rentals now. Host Financial is one of them. There's another one out of Austin called Vizio. I haven't used either one of them personally, but I do have clients that utilize them to add to their portfolio for sure.
Okay, good. So that way they can start with one and hey, it goes really well. Okay, I'll take another one and another one and just keep adding up. And then hopefully they don't run into DTI issues. Are they able to use the rental income from these properties to qualify with their
You
loan?
You can if you're getting an investment loan. You do have to for most banks, you have to show 2 years of
Mhm.
short-term rental income for it to be used. If you're getting a vacation home loan, they cannot use projected rental income because it's
Mm.
supposed to be for your vacation home, not an investment, so it should not come into play.
Yeah.
But so that's kinda how that works.
Okay. So yeah, you just got basically, you got to run your numbers, guys, and then figure out the best strategy and how long it takes you to get to each one, whether it's a 2-year hurdle to the next one, or you have a really good income and you're buying a different at a lower price point, for example, so you can buy more, and just create that cash flow. But I like the short-term rental cash flow because, like you mentioned earlier, it's a boost into your cash flow while you can use that money to invest in long-term investments as well, and multi-units if you like, or other kinds of different real estate avenues. So even for you, do you invest more in multi-units or homes or short-term rentals?
It's really just kinda like whatever opportunity presents itself at the time. Uh, like we're under contract on a 12 unit multi right now, and we're also under
Nice.
contract on 2 teeny tiny single families. So we invest for long terms in Chattanooga, And those are about 100,000 bucks each, like for a duplex. So we just kind of pick those off on an ongoing basis, because it's not like an apartment building where you have a gigantic chunk of money going out the door at one time that you can just kind of keep going and not really notice. And then I had a short-term rental opportunity just present itself to me. I wasn't even in the market. I was looking actually for a little bit of office space for myself,
Mhm.
just because there's so much going on in our house all the time, that my home office sometimes doesn't work for what we're trying to accomplish here. And I couldn't find anything where I live on 30A in Florida. There's not a lot of commercial space because they want to keep it not commercial.
Yeah.
And so I started looking around. I was like, I don't want to rent anything because I can't rent. I'm a landlord. I cannot rent anything. It just doesn't work with my
It's
brain.
so hard to do that.
Yeah. So I thought, well, maybe there's some like small little office strip I could buy where I could use part of it as my office and then rent the rest to somebody else. So I started calling around because there's nothing anywhere online. And I called like a little community called Gulf Place down here. And I said, do you guys have any office space for rent, or is it anything for sale? And they said, no, but we have these townhomes that are right behind that are part of our community, and they're mixed use. They're office on the bottom and short-term rentals on the top. And I was like, oh,
Ding.
excuse me. So
You just call my name here? Yeah.
and
I
so
heard
I
my name
dug
shout
around.
out. Okay.
Yeah, I dug
It was
around and
meant for
found one
you.
that wanted to sell. And I'm like, and so we're closing on that in a couple weeks too. So
Nice.
it's
Did you
really,
sell the whole community too? Since you're already there, you already know it. You should just sell the whole thing for them.
yeah, I should. But
Yeah.
actually, one just did hit the market today that for quite a bit more than what I'm under contract on for an identical unit. So
Okay. If
hopefully
it makes
the
sense for
seller.
your next investor, you can always introduce it to them. Say, hey, you have one next door. You can come visit me, but here's a good opportunity if it makes sense.
Yeah. So, just whatever opportunity presents itself at the time, we try to keep enough cash on hand to be able to be kind of flexible and, jump when things present themselves.
Cash is king, right? Exactly. Just like your stock.
Yes.
That's amazing. Cool. I'm so glad that today we got to talk more about short-term rentals, vacation homes, and how that just works in general. Because there's a lot of misconceptions out there. There's a lot of gurus out there. There's all these different ideas, but I think it really does make sense. It's a newer avenue of real estate, but if you look at the numbers, it can make sense for you. It's a great way to do it. And I think before one more thing, before I remember a guru real estate guy, he mentioned, hey, have you ever thought about doing this? And I'll ask you about that. He said, get a short-term rental, right? And if you run the numbers correctly and you're managing it in pretty conservative, but you're managing in a good number, he goes, instead of buying furniture, he just rents the furniture, right? So he says, okay, I'll just buy a 10 unit or 12 unit in Tennessee, for example, in a good area. I'll have it vacant. I'll remodel each unit. I'll do rentals. I'll rent all the furniture out per unit, and the cost wise, I'll justify into cost. But overall, I'm not paying all this money cash out, and my numbers are still great. And I'll improve the building, and after that, I will resell it again.
Oh, that's a great strategy. That's a very specific strategy, but that is a great strategy. So in the markets that I buy short-term rentals,
Mhm.
since so many of them were vacation rentals
Mhm.
before, they
Yeah.
normally come furnished, so you don't have to mess with that as much. But that is a really great strategy. Very interesting.
Yeah, nice. I'm glad. Yeah, because most of them would already come, but he was talking about, okay, let's do it at a bigger scale. Let's go for a 10-unit building in a specific area that has the vacation area. So like, that actually makes sense because he's just showing me cost analysis and showing me the cost of buying all the furniture per unit, timesing by 10 or 20 units. It goes, that's expensive. But if I had some long term, some short terms, and the cost to do that, and I held it over 5 years, I'm gonna make more money. And I don't have to any liability to the furniture. I could just jump it all back to the
That's
owner. Yeah.
yeah, that's pretty cool.
Okay. Well, we'll talk more about that later. Just, run these numbers, right? And see
Okay.
what's best for our clients in that. So how do people reach out to you?
You can find me on my website at theshorttermshop.com or on Instagram at theshorttermshop.
Cool. And can they reach you at averycarl.com as well?
They
If they
can.
do.
That just is going to point them right back to theshorttermshop.com.
Okay, perfect. Thank you so much for being on our show today. And make sure everyone out there reach out to Avery if you have any questions on short-term rentals and different areas that she already caters in. And feel free to reach us as well. And thank you so much for being on The Truth About Real Estate today. And I'll see you guys in the next one.